Hey guys, it is November the 2nd, and we have FOMC meeting today, which essentially means that I really can't talk about the stuff in the future because really everybody's going to be waiting with bated breath to see what the FOMC meeting has to say. Now, today I'm going to talk about Devon Energy and Consol, and it's really fascinating because as I watch the tape, I'm seeing a lot of like very skewed, very strange news relative to what I'm hearing. So I don't know if I have a hearing problem. I don't think so, but or it's the jet lag, or if like, as I've always suspected, somebody reports the news to their own ends on all of these reporting agencies. But I'll show you some of the things that I'm seeing. But we are going to primarily focus on Devon and Consol today. All right, let me share my screen. Past performance is not indicative of future returns. I want to show you these indices today are just totally in the red. They started out slow. It's like a slow trickle. And what you can see is NASDAQ getting crushed far more than the others. At first, the Russell did not want to participate in this downside, but we've seen it slowly and slowly kind of trickle downwards today as the FOMC meeting is still coming out. And it's really big cap tech that's taking the biggest hit. Tesla and Amazon down. I really think they're down together because they share discretionary together in that group. So if somebody's like bringing down all of discretionary, Tesla would get hit for no reason. Now, is Elon doing a lot of strange news flow on Twitter? Yeah, I feel like he needs to just calm it down a little bit. Just give people a chance to realize how much stronger Tesla is versus every other big cap. That would be like my dream, but he's going to do what he's going to do. The other thing that I heard that was kind of odd was on the AMD call that came out. People are spinning it like they were saying gaming is strong, but literally the last thing that was said on the call at like 1 hour and 1 minute, you can listen to the CEO talking. And she's like, look, why don't you model gaming as flat? And if we get upside, that's cool. Flat is not strong gaming, folks. I don't know where you're coming from with that. So like fake news galore. I've always been like, I've always been so frustrated with this idea that we report only the truth nonsensicalness that we hear from CNBC, Yahoo Finance. All of them are guilty. And I really think it's because you hire these people to try to go through a gazillion earnings reports that are all happening at the same time. Somebody's going to get a soundbite that's slightly off, out of context, or slightly wrong. Now, poor Devon is getting clobbered, and we are going to talk about that in a sec, because I think that might be because of the Barron article that talks about a dividend cut. And I got to tell you, I didn't hear that. And I'll show you actually what I saw, which makes it so bizarre. One of us is right, one of us is wrong. I'm even trying to understand contextually how they could have gotten it so differently than what I'm seeing. Anyways, economic data, obviously the FOMC at 2 o'clock. Between then and now, it's just going to be a trader's, whatever you have it. Just remember that sometimes the initial reaction off the FOMC can be very different on the next day. So you really almost have to wait for 2 days to see how the market reacts on these things. And if you're waiting for the FOMC to buy, that's kind of something that I would just remind you of, that the morning may start out very awkward. You really don't get it until Friday, which direction. Now, one of the major things that I have concern for going into the end of the year, which drives me crazy because I am having difficulty at these levels finding shorts, is that, you do have some rotation out of equities to happen through the end of the year, and some people that are just going to do tax loss selling going into the end of the year. So it's very odd. It's just a very odd year to see how it's going to go, but we are more or less out of earnings season after this week. We still have a bunch of energy names still to report, but mostly we're out after this. We're out after this week. So it's kind of an awkward period. I mean, there'll be Disney next week and stuff like that, but it's really limited relative to what we've seen these last 2 weeks. Now, let's talk about the remaining earnings. After we get the FOMC, we do have eBay and Etsy, which I just can't see them doing amazing in the third quarter because back to school just wasn't there. Although in fairness, I didn't think Amazon's numbers were nearly as bad as what everybody else was saying, but I'm not looking for them to do very much. On the travel side though, Booking, Expedia, MGM, Booking today, MGM tonight. I've been bullish. I am very worried about this market in general, because even if it does really well, who knows how the market's going to react. But the fact is MGM is cheap. Okay. So if it does do something crazy, it may become an opportunity, because it will be the first sign of whatever China's going to do. And so I'll be listening to it more for what China's going to do than anything else. I definitely have a position in MGM right now, though. Then we have Marriott and Expedia. We know from Hilton that it's probably going to be fine on all of that front. And then CF comes out as well on Thursday. And because of what we're seeing in ammonia, urea, and then in nitrogen in general, I think that they should be pretty strong. It's just what they have to say about guidance going forward as relates to China, and whether China's ever going to export any nitrogen. Thus far, we don't know is really the answer. Anyone that's guessing is just guessing at this point, unless they are a part of the family that like rules China, the family of constellation of people that's in the ruling party. That would be the only way you would know the answer to that question. And quite frankly, I doubt those people are talking. So just realize whatever you hear, it's nonsensical conjecture for the most part. Okay. Earnings thus far, though, has been very strong, and that bothers me a lot, and specifically bothers me. I want to show you this because this industrials, the companies that are actually in the green, okay, Eaton and Train, they did okay, but Boeing did not do okay this quarter. Okay. And part of that is because defense spending still hasn't happened, and none of the defense companies are pretending like that defense spending is going to come in the next quarter. End of year. It's really 2023, and they're really thinking mid to late, not the beginning. The commercial aircraft, like people are done buying planes, even though he is arguing and doing his job as the CEO from a financing perspective to tell everybody that people are still buying planes. I'm not seeing it, because really most of the airlines are full up, for lack of a better way to describe it. Everyone else, though, is actually doing pretty well. So why industrials is weak is kind of its own thing, but I do think that's why when you look at the index, the S&P is a little bit stronger than NASDAQ by quite a bit. But that's what I'm seeing. Now let's go to Devon, okay? First of all, I don't understand why they're saying they're cutting the dividend, because one of the major things in the release, as well as the discussion, was that that this quarter represented a 61% increase in dividend yield year over year, or a 7% and change dividend. Now that the stock is kind of getting beaten up, it's an 8% dividend yield. So that's just how this thing swings. And if that's how people want to report it, okay, but it's completely divorced from what I'm seeing, to be fair, because if anything, they had 2 acquisitions that have finally closed, and now they can refocus on things like stock buyback and increasing the dividend yield. So it's just this really weird scenario that we've got. Revenue growth up 56%, earnings increased by, like you can see it, 1.8 billion from 8. So it's over, like it's a more than a double. It's 1.3 times or 2.33 times, but it's 100% increase, over 100% increase. So this is like crazy important, like crazy, amazing good. They are suggesting, and one of the nuances that might be important in there is how they're pricing the midpoint of what they're expecting oil to be at. And they're now looking for like $80 oil to be the new norm and above. And that is controversial at this point. I think it's probably right, but that is what it is. Consol Energy, though, I really do want to get into that a bit. With Consol Energy, what I want to say here is that even though this thing traded down a bit, things are really good at Consol. And what I want to show you is that their revenue is up to more than 200%. So 3.76, if you multiply it by that, is how you get to 561, but subtract 1. So you get more than 2.5 times is how much the revenue component is up. This is crazy good. And then when you look at net income, it's just a flip from last year, from negative to positive. They're making money, and they're making money and could have made more money if we didn't have railroad strike potential at all times. And if the railroad infrastructure was even better than it is now. We have talked before that part of the reason we like Consol is where they sit in the infrastructure of the railroads. And even with this this tripling, more or less, or slightly under tripling of freight expense, you still get so much economy of scale. It's kind of nuts. That's how you get from a negative $3 last year to a positive $4.36, of which they are now going to issue dividends. And then continue to buy back stock. Now, I want to show you this in the mix, okay? This is actually last year, this is this year, and you can see that even though domestic is like up 70-ish, 60-ish%, and this is, and we'll talk about what that is, exports are more than double. And you can see that it's really across all the types of coal, including metallurgical, which I thought was going to be potentially weak, but no, that is the nature of what it means to shut down, not just Russia. I'm not going to do imports, but have a look at the map of where things are made, and you will see that Belarus and Ukraine are also very important for the coal industry, especially metallurgical coal. And that is the net impact of it. Now, I have said over and over again, that is part of the reason why it's hard for me to be very bearish the US, because if this is what we're experiencing in the coal market for met coal, which is used to make steel, et cetera, right? Then it would absolutely mean that the cost of making things in Europe is just higher. And let me share with you this again, their Pennsylvania facility, this is what the coal that they produced. You can see they had lower tonnage. Okay, 18, the top part is the tons produced, 18.2 tons versus 17.8 tons. So lower tonnage for sure, okay? But the cost that they're getting, the price that they're getting is like 50% plus higher. And then there is economy of scale. So even though when you look at it, it's, still, $33 versus $16 on margin, you are getting just economy of scale, for lack of a better way to describe it. So it's just so much more profitable, even though their costs have doubled. So if you look at all, this is the cost. So it used to cost them $16, now it costs them 33, but because of 67 versus 33, you still end up with this amazing result financially. Okay, one of the things that you have to know is this 67 number is because all of their coal is called for, more or less. So whenever they make extra coal, the price they actually get is $100 a ton. So just FYI, if they get any kind of upside on production, if we get to ship more, if what have you, the going rate is significantly higher. Now, I want to talk to you about this domestic versus export, okay? Definitely on the export, they get more, but specifically, even on the domestic, there was this big, long discussion on the utilities companies and talking about the fact that they were burning nat gas, okay? But they switched, so they were burning nat gas, and that was cool and everything, except that it was not, given where nat gas has moved to, very profitable. And that just had to do with the fact that there's a bit of a coal shortage in a lot of ways, for lack of a better way to describe it. Usually what happens is when you see like nat gas spike up, then coal comes up at a price that's slightly lower because it is more polluting. You got to put in all of that stuff. And so then you'll see the switch off from nat gas to coal, even here in the United States, where, there are other things that have to be operationally that have to be taken into consideration, but it still does happen for sure. But because of what had been happening with the strikes, the railroads, all this different stuff, they had to actually this summer burn nat gas at prices that didn't make any sense. Now we'll see that when the utilities report, they are later reporters, but that's essentially what happened. Now overseas, or as a result, this number, even though you still see a huge export number, this number was dramatically higher year over year, okay? Because basically, they don't want to be in that position again. That was really expensive for the utilities companies, for lack of a better way to describe it. Now, the last thing I'm going to say that was very interesting about what folks had to say over there on the coal front is, why is Consol's coal so in demand in Europe right now? Why is this number what it is across all of this? And it has to do with the composition of the type of coal that Europe burns. Now, Russian coal apparently is lower sulfur. Consol's Appalachian coal is also low in sulfur, but African coal that comes through and is used throughout Europe is not. And so part of the demand that they're seeing from Europe is just the fact that to make those carbon neutral, the carbon, whatever it is that Europe is demanding, they need to kind of mix up high sulfur coal with low sulfur coal. And that means that Consol's coal is they're willing to pay more for it, for lack of a better way to describe it. And that is just an intriguing aspect of geology that is something to watch, especially since Europe is very hell-bent on staying green, despite the fact that it's got a massive winter problemo in the way of energy. And with that, I will stop sharing. Hey, David, how you doing?
Hey, good, May. Very, that's interesting. Coal, I mean, the Consol,
Yeah.
that was 3 months ending September 30th.
Yeah.
And that's a pretty big increase over like warmer months, right?
Yeah. So you would see the buying for the winter in the next earnings report, and then you'll see the shortfall buying that'll happen in the following. So yeah, you're right. Like this wouldn't have been, I mean, it's not a nothing, because obviously, because people can see the writing on the walls, that's why the numbers were strong. They don't want to wait till the last minute and figure out what's going on with nat gas and coal into what everybody is like. I mean, either Europe has done something really special that none of us could foresee, or they don't have what it takes to get through the winter without turning off factories or doing something really specific. It's one or the other, you know what I mean? And so, yeah.
So do you see
coming.
coal is more of a long-term, maybe, isn't long-term, I mean, a couple of years?
I mean, definitely for the next 6 months, right? Because the one whammy that we don't know, but even then, I think it's higher in sulfur, the Chinese coal. China definitely produces a lot of coal, but China's also like, you know, we're in such a precarious geopolitical situation right now that, quite frankly, running down reserves for any other country but the US is really dumb. For I don't know another way to say it, because everybody's like, we don't need the reserves or whatever, la la la. Yeah, we do. I don't know what people think happens if there's a real conflict. Do you know what I mean? But I'll tell you what definitely happens for the US. We actually do have the ability to continue to go to, like, we could just stop shipping this stuff overseas and we'll be fine in the United States if we just protect our own interests. But guess who's not going to be fine? You know, so like, it's such a precarious situation. With China, they are a big coal producer, but they don't produce oil or nat gas in a way that makes them feel great about it. So my suspicion is, you know, even if they start to export, they do so as a trickle, not as a windfall to Europe, but still helpful if they start doing it.
But they don't have the right kind of coal, right?
I mean, technically they could, yeah, it's a little bit higher in sulfur, and I think it's more met than, but you know, they definitely have a lot of it as far as that goes. So it could still take pressure off of Europe a bit. That's why, like, I still think China's a bit of a wild card. So China can take pressure off of coal, they can take pressure off of hydrogen because they make it through, you know, it's a waste, like essentially ammonia is a waste product of energy, of the energy complex. And they can take pressure off of fertilizer if they so choose, but specifically in fertilizer, it would be nitrogen. But you got to think strategically for them, looking at the chessboard with all the craziness that's happening. They've also got a desire to stockpile. Do you know what I mean? It's just scary. And and then the other thing that was discussed that I forgot to talk about was India. India is one of the bigger buyers of our coal right now, by the way. It's not even Europe. Yeah, because they're looking at this hot mess, and they're also trying to make sure that they don't have like riots in the streets, given what happened in Sri Lanka early last year. So it's a really ugly situation right now in energy world.
Good, yeah. Okay, so but yeah. Good for coal. Good for coal,
and actually good for nat gas, for all this desire. And that was, you know, I actually love Richard in the mornings, because right now, even if you're an investor, you can't be completely oblivious to what's happening in the trading community. And this thing, like, Devon does not deserve to be down 7%. I'm just going to say it like it is. So as soon as that settles down, that obviously is a buy. If you still, you know, was it delicious at a 10% dividend yield? Yeah, it was. Do I think that things could continue to be great for Devon? Well, it's still giving you now today an 8% dividend yield. That's pretty good, quite frankly. We'll see what happens with rates and how that compares to rates. But if Devon gets licked again by the markets, even Devon has told you it still has 700 million left on the buyback. And, you know, this quarter, as far as buybacks, I mean, I wasn't anticipating them to announce anything crazy on buybacks or dividend, just because they still had 2 transactions that closed on top of this quarter. So there's nothing for them to announce this quarter, but next quarter is its own deal. You know, it's really dumb, these shorts in Devon, for lack of a better way to describe it, except that
Well, it
they're,
may be just profit taking. That's been the best
yeah,
stock.
it could definitely be profit taking. And then we'll see how it
Right.
goes going into the next dividend, because I don't think, like, it's a 7% dividend yield. They'll have no problem paying it, and they're going to make hand over. They're just going to print money for the next, at least foreseeable 6
So
months.
are you saying they're paying a dividend and buying back stock?
Yeah,
Both?
700 million is what they still have in the buyback. They're going to, now their average cost on that buyback, by the way, is $50 off the total 2 billion that they had to buy back. And they couldn't buy
Mhm.
back any stock during the 2 acquisitions that they just absorbed. So yeah,
That's amazing.
yeah.
Wow, that's really strong.
Yeah, these guys are, everyone's making, like, the complex, the energy onshore is definitely making money. Offshore is making money, but a lot of them are excited to try to, you know, do projects internationally because Europe is so desperate for anything, you know. And then because it's still the case that oil to nat gas is less polluting than coal, you know, the demand for nat gas is, no matter what the price is, because of the other whammies that you have with the environment in Europe, is it's just a very specific situation that's happening.
Gotcha. Okay, great show, May. Thank you.
All right, guys, good luck. Half an hour from now. Bye.